Okay, right now you're looking for a strategy that you can easily use on your mobile phone. And in this video, I'm going to show you guys a profitable strategy that can help you to get entries and exit points in the market. Okay, so right now let's get into the chart. So the first thing we need to find is major support and resistance, and it's not found in the lower time frame. I mean it's not found in the 15-minute time frame, it's not found in the 5-minute time frame, and it can never be found in the 1 minute time frame. So what we need to do is that you have to find your support and resistance in the higher time frame. When we're talking about placing major support and resistance, we're talking about placing it within the higher time frame, which is the 4H time frame, which I'll say preferably is the best, and the 1 hour time frame upward. So let me show you what I mean by that. So first off, you see the charts like this, you just see things like this, but what you need to do is that you have to zoom out so you can see the bigger picture of things. So let's do that right now. Now we can see the direction of the market, we can see where the market is going. Let's use this for example. This is the point we are going to work with. Okay, so what you want to do now is go get your tool. You can see this block circle stuff, then just go to the block. Let's use rectangle. You can use rectangle or you can use a line, but let's use rectangle for this, and place this, then let's make this to be white. Settings, I think you have to hold that, then let's place it to be white so we can actually see it clearly. And then at the second, this is the support. Now let's place in the resistance. So let's go to the rectangle again, same thing, and place your resistance in the market. So right now, this is what you want to see in the market. Now the second thing we have to do is to go on the lower time frame. So let's go to the 1 hour time frame. Now this is the 1 hour time frame. You could see how these have actually made things more simpler and easy for us to understand. Now let's take a look that at this point here, we could know clearly why price had to change from being a downtrend to becoming an uptrend. It's because of price hitting the support in the market. And when price hits your support in the market, you're actually going to be waiting for bullish confirmations. There are different types of bullish confirmations, which there's a engulfing candle, three white soldiers, and in this case we are seeing three white soldier occurring here. We could see those three bullish candle taking over the market, which changed the price of the market to becoming an uptrend. So the major things you need to look out for when price is in a support is engulfing candles and white soldiers. Although there are different types of bullish pattern, and if you want to check that out, I'll leave it in the link in the description so I can get it after this video. Okay, when drawing your major level, what you need to look out for is constant point of rejection. Like this one I drew here, you could see the effect I'm saying here, the same effect and same effect. So for you to draw your support and resistance the right way, you need to look for those constant point of rejection. Look for the point where price touches and it goes up, or where price touches and it goes down. Now the second thing is trend line. In terms of trend lines, there are actually two ways to draw in your trend line, which is drawing it from close-ups and drawing it from a far distance, but this actually depends on what you're trading. So in drawing trend lines from close up, you have to join the points from close areas, and just as the same thing, you need to find where all of them have a point of meeting, a point of meeting, and a point of meeting. But when drawing trend lines from wide angles, what you have to do is that you have to zoom out and go get your trend line tool. Let's get our trend line tool right here, trend line, and draw a trend line. What you have to do is that you have to make it touch the point of reaction. Although I could have zoomed in a little bit, but yeah, let's just use this information here. Okay, right there, that's how to get it. So let's zoom in right now and check if every point, like I said, what we need to look for those points where the market touch and a trend reversal happen. So as you could see, it was happening here, same thing here, same thing here, and I think I need to remove this so we can get to the other side before price had to break the trend line, go in the opposite trend. And you could see the drop that happened right here after price broke the trend line. Now to make things more easier than it is right now, you can add in the moving average and to already give you the trend lines and show you those entry points. So right now, let's just enter the moving average, then go to indicators, then search for moving average. So this right here is moving average. Let's just add that. Sorry, let's add the moving average, and what you have to do is that you have to make the number of the moving average to be 20. So let me just add everything, although it's already added up the period. Let's make it 20, the shift to be 0, then the method simple. I know a lot of people ask me this question. Some people ask, what type of moving average are you using? I'm using the simple moving average. The simple moving average is what we are using here. Then the pixels to be 2, so I can actually see this. But if you want to make the pixels 4, but it to be so big, so let's just make the pixels to be 2 and done. Right now, as you could see, it's not really that clear. Let's make the moving average to be a very bright in color so that we can see through what it is. So let's go back to the F points, moving average. You see this color that is mid-red. Let's just turn that to be something a little bit more bright. Let's take yellow. Yellow will be bright, then let's hit done. So this is it right here. Now the rules for this strategy is, once price is below the moving average, you have to take a sell, and once price is above the moving average, you have to take a buy. Although I had to make this moving average to be yellow so it can be vibrant for us to see. What happened at this point was price went below the moving average, and we could see that clearly from this point here. Once price was below the moving average, we could see how price just, just drop down, and the moving average at this point is acting as a resistance, and we could see how price was below the moving average and price keep on going down, 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 and down. Now with the examples, I'm going to show you how you can get entries and exits in the market. So remember what I said, once price is above the moving average, we have to take a buy, and once price is below the moving average, you have to take a sell. You could see exactly how price went above the moving average, and price keep on buying, 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 and buying, and even the moving average acting as a support in the market, which is telling you that hey, price is not yet done buying in the market. But when you see price going below the moving average, this is a clear example that you need to take out your profit, you need to close the trade, you need to take out your profit from the market. So that's exactly what happened. So right now, no, and not just, and you could, and you could see, and you could see clear examples like this again. And now you can see clear examples like this. Price went above the moving average right at this spot here. And what happened? In case you want to be very sure of everything, you can simply draw in your own trend line. So let's add the trend line here and place trend line in points of rejections of the market to even make things more easy for us to understand. You could see that price is actually touching those points and it's rejecting. Price is touching those points and rejecting, touching this point and rejecting, touching this point and rejecting, and let's go for that. And once after price went below the moving average and put the trend line, you could see how price started to and consolidate through before price tends to change. But this does not end here. You can actually add in the RSI to make things more easier for you. Just hit the F button and F button again means, so let's go to relative strength index. If you, yeah, let's go to relative strength index, search for it. Let's search for relative strength index. Come on, where is it? Okay, relative strength index, adding the relative strength index and 14 period 14 blue line, and just leave it in default, just leave it in default and hit done. Now the simple thing about the RSI is that once price is at the 30 mark in the RSI, you need to look forward to take buys in the market, and once price is at the 70 mark, you need to take sales in the market. So you might be asking, how do I know it's 30 and 70? Look at the 30 mark here and look at the 70 mark here. So these are actually points in the RSI. And now let's take this for example. Let's use this point here for example. Right here, you could see that price went above the moving average, and what was happening here, we could see clearly that price is already at the 30 mark in the RSI. This is actually two confirmations telling you that, give that go ahead signal that hey, you need to take a buy in the market. And what do you have to do? Let's say for example you take in that trade, you place the trade for a buy, and you hold the market, you obey the moving average instructions. So now let's look at what is happening in the RSI. So the RSI right here is already giving us that 70 mark, and we could see what happened. There was a kind of, there was a retracement going on in the market, and where the market retraced to, market retraced directly back to the moving average, and the moving average acted as a support in the market to push price up, and that was exactly what happened. So let's look at this point here. We could see that price was at the 70 mark in the RSI, and price was at this point in the market, and you could see how price went below the moving average. Price went below the moving average, and you could see how the RSI went directly to 30, meaning that you can hold that trade for a sell. Although the sell was just for a little period and kind of little stagnation, but this is an entry, and this will give you a lot of pips in the market. And also, if you enjoyed this video, don't forget to leave a like and also to subscribe to the channel. So with that being said, I'll see you guys in the next video.